Hello, good afternoon. Welcome to the marketplace. Coming up, Finance Minister Dr. Kansela Tuforsen expected to introduce measures designed to sustain ongoing reforms and enhance revenue mobilization in the mid-year budget review. Also ahead, an update on Treasury bills auction. Government records astonishing 195% oversubscription, whilst interest rates plummet. My name is Darryl Kwao. Thanks for being with us. Details coming up. Finance Minister Dr. Kansela Tuforsen is expected to introduce measures designed to sustain ongoing reforms and enhance revenue mobilization. These plans will be detailed in his mid-year budget review presentation to Parliament this Thursday. Here's George Affe with more.
This has been influenced by the fact that mobilizing the needed revenue is at the heart of government's programs and projects. That is why the finance minister wants to ensure that he's able to get all the revenues targeted so that funding for some of the campaign promises doesn't suffer. The minister is also looking at how these reforms will help close the gap when it comes to the budget deficit, especially due to the fact that Ghana is under an IMF program. Government is looking at mobilizing more than 200 billion Ghana cedis in revenue by the end of this year. But in the first week of July this year, provisional numbers show that we have fallen back on meeting some of the half-year targets. But the finance minister would use the presentation to also highlight the significant progress that has been made with some of the tax lines. On the macroeconomic side, the minister would use the presentation to also highlight the significant progress that government has made since taking over and how the budget is on track in terms of the IMF program. Finance Minister would also provide more details on the recapitalization of the National Investment Bank after injecting some 1.4 billion Ghana cedis in cash and bonds. There will also be some updates on government's flagship programs like the 24-hour economy and the big push, and how government intends to finance some of these programs to help expand the economy in the coming months.
All right, joining me on Zoom with a look ahead to the mid-year budget presentation is Head of Finance at Melbourne Capital, Nelson Kujo-Kwagbeji, especially as we take a look at issues concerning revenue mobilization. Good afternoon to you. So what indicators should we look for in the mid-year budget review to gauge whether Ghana is on track to meet its 2025 revenue targets?
During the budget presentation, the government intended to raise about 224 billion Ghana cedis as revenue for the year. And we have been told by the Commissioner General that as at the first quarter, about 41 billion Ghana cedis has been raised as against a target of 39 billion Ghana cedis, which means that the government has actually outperformed its targeted revenue for the first quarter. And if that is what we are to go by, then we can conclude that with the tax reform measures that the government put in place, they may exceed their second quarter budgeted revenue for the year. Now, you will recall that when the government came, they actually took off some revenue-generating taxes. For instance, the e-levy and then the emission levy and other sort of levies. That may create some level of a revenue gap. But the government said they will be depending on the uncapping of the GET fund and other sources to actually close that gap. So we expect that once the first quarter target has been met and considering the fiscal measure that the government put in place, they may be able to meet their second quarter revenue target. In any case, the economy itself has been responding positively to, the policies that they put in place. The first quarter GDP grew by 5.3%. Inflation has moderated to 13.7%. We have enjoyed relative stability of the cedi. We have built enough reserve that can cover about 5 months of import cover. And so putting all these indicators together, we can just, confidently conclude that the revenue target for the second quarter will be met.
Yeah, how might the government address challenges around its expenditure and debt servicing in the upcoming review? Adjustments likely?
All right, I don't foresee or I don't see any challenge with expenditure management. In fact, the government, since they took over power, has embarked on a prudent expenditure management strategies. You recall that as at now, the country is operating with about 56 ministers, as against 124 ministers that we had in the past. The president, through the chief of staff, also gave a directive that no DSTV subscription will be given to public office holders. And again, this issue, another issue that has to do with the travel, first-class trip by, political office holders. And so all these expenditure management measures, I believe, will significantly impact on our fiscal consolidation measures. The only issue that I want to say is that all these expenditure cuts will yield to a certain amount of savings. In fact, the economic advisor to the vice president made mention of the fact that all these savings will amount to about 121 million, Ghana cedis a year. Now, my concern is, how are we going to use this money? You remember in the past, there was a 10% cut on the salaries of public office holders, and that 10% was used to build CHIPS compound. So I am advising the government that if we are going to get 121 million cedis from the savings, then that money should be designated to satisfy the recurrent expenditure of the senior high schools across the country. Then in terms of debt servicing, I think we were told by the president during the State of the Nation address that there was nothing left in the sinking fund. And so as at now, we want to know how much has been built in the sinking fund and how much has been paid out of the sinking fund. So these are the areas that we are expecting the finance minister to talk about as far as expenditure management and debt servicing is concerned.
Do you expect any other amendments or policy shifts in response to our economic performance in the first half of this year?
Well, I don't expect any major policy shifts. What I expect the finance minister to do is to tell us what measures the government is putting in place to actually consolidate the gains that we have made. I also expect the finance minister to tell us whether we will be exiting the IMF program or we will be extending the IMF program by 1 year, something that I have been advocating, that for us to effectively and efficiently consolidate the gains that we have made, I think it will be prudent for us to, continue with the IMF program for at least 1 year. We must not rush out of the program because we have done that in the past and we came back to 0.0. So I expect the finance minister to also update us on whether we will be exiting the IMF program or be, extending it by 1 year. Then finally, we also expect the finance minister, as part of the policies, to tell us the status of the technical assistance that they are seeking from the IMF regarding the VAT. You will recall that during the presentation of the budget, the finance minister made mention of the VAT, that the effective VAT rate in Ghana is one of the highest, in the sub-region. And so they are seeking technical advice from the IMF in order to redress the issues that concerns the VAT. So we expect the finance ministers to, as it were, also update us on some of this. So these are some of the areas that we expect the finance minister to act on regarding any policy shifts, concerning the MidYear budget.
Interesting you bring up the IMF program. I also wanted to find out if there were any new initiatives related to structural reforms that would be critical that we see in the MidYear budget.
Well, when we talk about structural reform normally extend beyond 1 year. In fact, within 6 months, this budget will come to an end. However, the government actually launched the Accelerated Export Development Program, where the president intends to raise non-traditional export from $3.5 billion to about $10 billion by 2030. So we expect, certain action in that regard. And if you recall, recently, there was the launching of the 24-hour economy plus. And one of the pillars under the 24-hour economy plus is the Make 24. And so we also want to know what are the preparatory, activities that are ongoing for us to kickstart the 24-hour economy policy program, most especially for the private sector. Don't forget, this policy is expected to generate 1.7 million jobs, decent and quality jobs. And so we expect these structural reforms to be featured in the budget. But as I did indicate, we have 6 months more to go. And so maybe the finance minister will just comment on the preparatory measures that they are putting in place to officially kickstart the 24-hour economy policy and the Accelerated Export Development Program.
Right. Before you go, we've been monitoring reports of what appears to be a shortage of dollars, businesses facing difficulties in accessing foreign exchange. How important is this in the upcoming budget, do you think, and what fiscal measures should be put in place? Is this artificial?
All right. So we have had constant assurance from the central bank that there is enough forex with them. And the Bank of Ghana actually made it clear that this forex can satisfy the demand of those who actually need them. If you check the website of Bank of Ghana this morning, the dollar is actually, the bid and offer is around 10 cedis, 40 pesos. I think previous week it was around 10 cedis, 30 pesos. Then it means that there is a bit of an issue there. And so I think the Bank of Ghana, must stamp its authority so that if there is any artificial shortages in the system, they can be corrected. In any case, if you read the Bank of Ghana Act 2002, Act 612, specifically Section 4C, the Bank of Ghana has the mandate of promoting and maintaining the stability of the currency. If the Bank of Ghana is having enough currency, enough forex to supply, however, businesses are complaining that they don't have enough forex, then it means there is an artificial shortage somewhere. And so Bank of Ghana must, intervene by making sure that those who are actually holding the dollars are releasing the dollars for those who need them. In any case, we have just started the third quarter. And so people may be holding the dollars in order to keep them for importation towards Xmas. So this will also be one of the reasons why we have had shortage in the system. So I think the finance minister just has to give us assurance that yes, there is enough forex, and that those who actually need them will get them either at the bank or at the forex bureaus for their international business transactions.
Thank you so much, Head of Finance at Meban Capital, Nelson Kujo-Kwagbeji. I appreciate your time with us here on the marketplace. Time for your financial market update. And the government recorded an astonishing 195% oversubscription of Treasury bills to the tune of 20.9 billion Ghana cedis. It, however, accepted 10.64 billion cedis of the bids as against a target of 5.43 billion. This represents a 95.82% above the targeted amount. Now, this is the first time in 2 months that the government has registered an oversubscription of the short-term instrument, but in grand style. Joining me on Zoom, Head of Trading at Republic Securities, Patrick Edemagama. Patrick, this is remarkable. Tell us more.
Well, good afternoon, Darrell, and the viewers. We've seen another interesting auction again where the government accepted about 10.6, rejecting about 10.3 billion Ghana cedis. Again, investors have thrown 20.98 billion at government on the back of confidence in the market. We've seen that the maturities for this week is summing up to about 5.2, but government ended up accepting way more than that. Again, we've seen the 91-day and all the other rates dropping. The 91-day fell to close at 13.72%. The 182-day closed at 14.61%. 1%, and then the 1 year, which is a 364-day, close at 14.73%.
What's your reading of what we saw on Friday? What's driving this demand?
Well, we've noticed that prior to this auction, the rates on the BOG bills fell sharply, and also the auction saw some rejection of bids for those that quoted higher rates. So there were excess liquidity on the market, and then that also attributed to why people threw a lot of money at government. Yeah.
How might the significant drop in yields in the 91-day bill influence investor demand or investor behavior going forward and liquidity in the fixed income market?
Well, we've seen it's clear now that the government really wants to drop the rates further. We are seeing other indicators like the inflation dropping below the Treasury bill, so making the Treasury bill more attractive. So with this trend happening, we expect that the rates will drop further. And when a lot of demand is there for the Treasury bill, the issuer will definitely reject and take some lower bids.
So we're seeing an oversubscription, interest rates are falling. How would this trend impact the monetary stance, do you think?
Well, you know, when the collections or the uptakes are going higher, the government would then have to pay more when it matures in 3 months or in 6 months or in 1 year from now. And we know that there is not so much spending happening now, but in 6 months to come or in 1 year time to come, there will be a lot of spending. The question will be, how are they going to get these monies? Because if you are collecting about 10.6 billion, then you have to pay close to 15% on that to retire some of these securities in the coming months. So we will be asking questions on how they'll be able to collect this when expenditure is happening now in the economy.
Right. Quickly switching to the stock market, we've got our eyes on MTN, SIC. I don't know what you're looking at.
Well, looking at last week, the GSE Composite Index and the Financial Stock Index went down slightly. The Composite Index could close at 30.65%, whilst the Financial Stock Index closed at 43.55%. It went down because we saw stocks like Unilever, SIC, MTN, and ETI losing some pesos, and we saw about 7 gainers. Republic Bank was leading the gainers, jumping by 13.92%. We expect demand to come up for those stocks that appear to be low price now, like the MTN and SIC, but in no time we should be able to see them gather more demand and increase price. For instance, we see MTN, they are approaching, I guess, where they normally announce the interim dividend for the year, and we expect that to drive demand towards the stock.
Interesting days ahead. Thank you, Patrick Edemagama, Head of Trading, Republic Securities. Appreciate your time here on the marketplace. Now, we're going to take a short break. When we come back, we have some more stories for you. Don't go anywhere. Welcome back to the marketplace. The Bank of Ghana is aiming to have an operational framework for non-interest banking and finance ready by the end of 2025, signaling a major step toward aligning the country's financial system with global best practices. Under the leadership of Professor John Gachi, who is an advisor at the Central Bank, a team of experts has commenced consultations and study visits to support the development of this innovative banking model in Ghana. During a stakeholders engagement organized by the Bank of Ghana in collaboration with the Ghana Journalists Association, Professor Gachi provided updates on the progress made so far.
It is important for Ghana to develop a framework to allow for non-interest banking institutions to start operation to actually, first of all, ensure deeper financial inclusion, provide choice to people who participate in the financial space, and also to ensure further development of businesses, provide alternative financing to businesses, and also for trade finance, and also for project finance in the country, and especially with the sukuk or non-interest bond that will be issued when the framework is developed. Point again is that the Bank of Ghana has a duty to ensure that we eliminate financial exclusion and to ensure greater financial inclusion. And that is what the Bank of Ghana is doing to pave the way for the development of the framework and to allow for this financing alternative to take place in the country. We mark the end of the year to finish with the framework, and that will be handed over to the top management of the bank, and then it will be taken from that level. So we believe by the first quarter of next year, everything would have been available for the public.
Well, we can hear next from the head of Banking Supervision Department at the Bank of Ghana, Ismail Adam, who explains how the bank is adapting a supervisory framework to accommodate the unique risk structures of non-interest banking and finance systems, such as profit and loss sharing.
We've been thinking through since 2016, but I guess this year we felt that this is the right time to push the agenda through. The starting point for every project is to get, in terms of banking activity, is to get the right regulatory framework in place. So what we are doing now is to get a team of experts, support from the advisor of the Bank of Ghana in respect of non-interest banking and finance activity to put the right regulatory framework. So the team is there putting the framework in place. Once we get the framework in place, that is what is going to aid us supervising and regulating this kind of institutions, i.e. non-interest banking and financial institutions that we need to license. And so the program now is getting the basis right. And getting the basis right is having the right regulatory framework.
All right, more news on our website, myjournline.com/business. Finance Minister to present MidYear Budget review on July 24, 2025. Of course, that'll be the talk of this week. We've got our eyes on that. Also, BOG dismisses dollar shortage claim, says there's enough to meet demand. myjournline.com/business. My name is Darryl Kwao. Thanks for watching. We will be back same time tomorrow.